Good morning, everyone, or good afternoon from wherever you are watching here on Real Vision. I'm Elaine Ly, your Real Vision host for today. Now, we're popping up live to discuss all things Evergrande and China, and a bit of crypto, of course. A lot of questions, but not enough answers. So let's try and wrap our head around this, as it's a story where macro and crypto all intertwine together. So it started off with one of the biggest property developers in China, the second biggest, I believe, Evergrande, who is on the verge of going into liquidation. But will the Chinese government let that happen under the rule of Xi Jinping? Now, over the past week, traditional markets saw red, one of the lowest days since May, I believe. But across the broad spectrum, we're reading headlines that say crypto markets are seeing blood. So I'm just looking at some of the numbers right now. There's a tiny slither of green popping up on the crypto chart. But I thought I'd bring up Ash Bennington, our senior crypto editor, and Jack Farley, our journalist at Real Vision, who lives and breathes macro and particularly interest in all things China. So let's get into it. Welcome, gentlemen.
Great to be here,
Thanks,
Elaine.
Elaine. Thanks,
Okay,
Elaine.
so what is happening? I think we had to do a live because there's just so many questions, and we've had so many interesting dialogue between all of us. With like, okay, you know what? Viewers would actually like to get probably a snippet of this. So, Ash, I want to start with you. First of all, give me the big macro picture on all of this first.
Well, Elaine, first of all, I should say we're coming to you live here, guerrilla style, from the floor of the Marriott Marquis Hotel at the mainnet conference, the crypto conference I've been attending here in the Waxman booth. They're kind enough to let us shoot from there. Look, here's the first thing I would say about what's happening in China. Chinese markets, Chinese capital markets, the Chinese government process surrounding it, the regulation, it is about as transparent as a jar of peanut butter. We don't actually know what's happening behind the scenes. This is the most important point, I think, for us to understand. Obviously, I know we're going to talk about this more. We've heard some comparisons here in the US about this being a Lehman moment for China. I think it's probably premature to say that, at least at this point. But the reality is, if we remember back to 2007, 2008, we didn't have transparency here in the US. The best regulated capital markets in the world, the deepest, most transparent, most liquid capital markets, and we didn't really know what was going on. So I'll let Jack speak to the specific points about what's happening, but I really think it's incredibly important that we keep that big picture context in mind, Elaine.
Okay, Jack, I'll come to you in a bit, but let me just hold on to Ash for one more second on this one. Short and sweet, is Evergrande causing the crypto market crash?
You know, that is the key question right here in the crypto space, and something that people are talking about who follow cryptocurrency as a macro asset class. First thing important to say, Bitcoin specifically was trading at around 48,500, sold off down to about 40,000 and change, now trading around 43,000 as we go live here today. Hey, guess what? That's not a lot of volatility for crypto markets. I don't want to minimize it and say it's a Wednesday afternoon, but the reality is we see a lot of volatility in this asset class always. Second point, with regard to Evergrande. Now, look, as I said, we don't have transparency. We haven't had time yet to look into the data, but this is an incredibly important point. Sometimes there's something called positioning risk. When people start getting collateral calls because their positions are underwater, for example, if they hold large positions in the Evergrande bonds, one of the things that may need to happen is, in fact, often does need to happen, is you need to post more collateral or your broker starts liquidating your positions. So what do you do when you need to post collateral? Well, the first thing you do is you give cash if you have cash on hand. But with the potential magnitude of these losses, that cash on hand may not be adequate to meet those collateral calls. So what do? The next thing you do is you start selling assets that aren't affected by the crisis, that aren't affected by the thing that's pushing down the price of the asset that you need to cover. So what does that mean? It means maybe, potentially, you start liquidating your Bitcoin position for cash or for yuan, and then you shore up those collateral positions that you have with the asset that is currently selling off. I should probably point out, Harry Krishnan and I have just written a book about this very topic called Market Tremors, where we talk about positioning risk, where we talk about the capacity for these things to turn into positive feedback loops, where selling begets more selling, and the asset classes that are affected or impacted by the sell-off widen the line.
All right, on that note then, Ash, let's ride the roller coaster over to Jack. Jack, I want to move on to talk about the whole scale of Evergrande, okay? Because I certainly didn't hear about the name of this company until this week because everything is so big in China, right? A population of almost, I think, well, maybe hitting 1.4 billion. But anyway, China is big. So Jack, you've been discussing this all week on Real Vision, so put it into perspective for me, just how big the whole company actually is.
Well, they have $300 billion in liabilities. So it is the most indebted real estate company in the world.
Ugh.
In terms of its assets, it has a lot of real estate and land on its balance sheet. So it has about 231 square meters of land that it holds as assets. And if my math is correct, I think that's about 4 Manhattans in terms of the square footage.
I like watching you do a math live on a live, Jack.
Oh, yeah,
Sorry,
yeah.
what you were saying?
No, this is all prep. This calculation took me like hours. I'm not good with math. But let's see. So people have been calling Evergrande a fraud since at least 2012. So people have been bracing for its demise for almost a decade. So now that it looks like the house of cards are going to fall, the question is, what are the knock-on effects going to be? Its bonds are trading at 25 cents on the dollar. You're starting to see stress in other parts of the highly levered Chinese property market. Companies like Fantasia, companies like Guangdong, their bonds are trading at 70 cents on the dollar, 50 cents on the dollar, and about 2/3 of the dollar-denominated high-yield market in China is property developers. But the question is that going to impact other parts of the global market, not just within China? Is it going to crimp demand for copper and steel, those ingredients that are so key to building buildings, as well as elevators? I was speaking to someone yesterday who's looking at shorting the elevators. So the question is, number one, how bad is it going to be? And number two, how is it going to impact other asset classes? Will the sort of contagion spread?
Okay. So, Jack, a lot of numbers in there, but I want to take an even deeper dive into the whole macro view into all of this. So let's talk about the two superpowers who are handling this. So is China worried about this? And how has the U.S. markets reacted to this? Jack, you first?
Sure. Well, China has been cracking down on some of the, let's call them speculative financial practices, such as what were called wealth management products or credit products. So in 2018, it passed a law that severely reduced the amount of things that could be issued. So I'll give you an example. Like Evergrande secures financing via these wealth management products, which are essentially loan derivatives that are issued by banks and are sold to Chinese retail investors. So retail investors in the US, we buy GameStop, we buy AMC. In China, they buy wealth management products that promise them returns of 13, 15, 18% per year at a time when bank loans typically earn something like 4 or 5%. So it's risky. The Chinese government has cracked down on that already. That's years in the making. The question is, to what degree is it going to support Evergrande now that it's on the brink of collapse? It injected about 90 billion yuan on Monday, about $14 billion, the People's Bank of China, in order to support liquidity. And then we had an announcement today that Evergrande, from Evergrande, that it claims that it will be able to meet its coupon payment on a bond due tomorrow. With regards to the U.S., this goes back to the contagion point. Markets puked globally. I think that the S&P had its worst day since May, as you mentioned. Everyone was expecting a turnover Tuesday, which is when a market crashed, and then the next day market does much better. Wasn't so much. S&P also ended down on the day. Today, however, you're seeing some real strength. S&P, I believe, posting its best day since July.
And then Ash, same question to you. Is China worried? How the U.S. markets? What is your view on that?
Well, I can't imagine that they're not worried. We were worried, obviously, in 2008 when we began to see the shadows of a potential crisis coming. Chinese regulators obviously are very much involved in that process. A state capitalist society, something that they're watching very closely. Let me just pick up on one point that Jack made that I think is an important one, which is that people have been talking about this over-leveraged real estate market in China. Ghost cities, these kinds of stories, overproduction, overcapacity on building across the board. People have been making this case for a long time. I believe Kyle Bass has made it very eloquently here on Real Vision, as have others on Real Vision. So it's something that if you want the bigger case picture, scroll back in your Real Vision timeline. There's a lot of great stuff. I will disagree with Jack on one point, which is very atypical. I don't believe for a second that he's not good at math.
Never put me to the test, I'll tell you that right now. Okay, so I want to pivot over to crypto. So one of the factors that played into ending a crypto bull run this year was when Elon Musk had his environmental concerns, but also when China cracked down on crypto miners. That was like the second punch to really ending that bull run. So China does seem to be an instigator for how the crypto markets behave now with the latest Evergrande fallout. So how worried should the rest of the world be, or concerned of this pattern that we're starting to see?
Well, I would say a couple of things. First of all, I don't think that the world, in the sense of states and central banks, is at all concerned about the valuations in crypto. We saw that yesterday here in the United States with the remarks made by Gary Gensler at the Washington Post Summit, saying this may not be an especially long-lived asset class. So I don't think central banks are worried too much about the price of crypto. I don't think that nation states are worried too much about the price of crypto. They would probably, in many cases, be thrilled to see some of the air come out of the tires. But I would say this, the end of the bull run, when did this bull run end? What's the current year-to-date performance on Bitcoin? What's the current trailing 12-month performance on Bitcoin? I believe it's way up. So I'm not sure that the bull market is over. This is a volatility-rich asset class that's not a surprise to anyone who's been watching it. I think this is more volatility than we've typically seen. This isn't, again, I don't want to minimize it and say ordinary Wednesday afternoon. But we all know, those of us who are in the space know that it's a volatile asset class. And the people here on the floor that you can probably hear in the background at the Marriott Marquis Hotel, who are all crypto enthusiasts, passionate about crypto, they kind of shrug when there are price movements like this, because for people who really care about the space, for people who are passionate about it, we're building infrastructure here that we're going to see 1, 3, 5, 10, 20 years in the future in the view of people who are very passionate about it. So I don't think that the short-term price impact is something that people are worried about or overly concerned with. Elaine.
Jack, anything that you want to add to that at all?
I totally agree on the volatility point. I think if you can't handle 48,000 to 43,000, then you can't handle 48,000 to 24,000. And if and when that happens, you're probably going to sell it at 24,000, which is the worst thing that you could possibly do. Yeah, I think the broader point is that I think Bitcoin is increasingly becoming correlated to other asset classes.
Right.
There's a great researcher who works for Kathy Wood at ARC, who's done great work on, in 2013, it was positively correlated, weekly 0.1%, 0.1 correlated. Then it was negatively, negative 0.1. And the regime sort of switched and swapped over time. Since March of 2020, Bitcoin has been relatively strongly correlated to the S&P 500, the Nikkei, sort of pick your poison when it comes to risk assets. And Elaine, I wouldn't be shocked if that continues, because think about it. If you and I are technology enthusiasts and we bought Bitcoin in 2013, what the stock market does on any given day, that we love Bitcoin. That doesn't change our thoughts at all. But if the marginal Bitcoin is owned by some of the largest hedge fund managers in the world, then Bitcoin just becomes another product that they can sell in order to fund other positions or raise cash.
Okay, now we do have to talk about this because it's all over the internet and we have to talk about it. So is this the Lehman moment for China, or okay, give me time, or will Beijing come to its rescue? I guess ultimately what I want to ask is, what I'd like to know is, what does this say about a world awash in debt against a backdrop of slowing economic growth and ultimately including China? We'll go to Ash first.
Well, and we didn't know the Lehman moment when Lehman was collapsing. So it's obviously very difficult to say that. In retrospect, it's pretty easy. Looking prospectively, it's more challenging. It seems like most of the analysts on the street are dismissing this notion that it is a Lehman moment for China. But again, obviously too soon to tell, something that we should watch. In thinking back to the Lehman moment, one of the things that began to blow out during that time were the interbank funding metrics, the measures of stress in the interbank funding market, things like LIBOR, OIS, and TED spreads. I don't think we've seen that yet. So I would say we're not there yet, clearly. I don't think we're there yet in China, but obviously something to watch and something that thoughtful people, particularly thoughtful people who have seen an asset bubble in their view in the China geography, are probably going to be watching very closely. Elaine, let me just add one point to Jack's point on the Kathy Wood ARC research. on the correlation. Look, I think that that clearly correlations are going to be increasing. This is an interesting thing. Jack was drawing this distinction between members of the community, members of the crypto community who really believe on this as a long-term asset class, and people who are, institutional investors who are trading in and out of positions, perhaps on shorter time horizons, maybe indeed on much shorter time horizons than people who are buying an asset, looking to hold it for decades or more. Look, here's the thing. I think it's fair to say that markets in the short term are a popularity contest. In the long term, they become more of a weighing mechanism. So I don't think the correlations ever go to 1.0 on crypto, but certainly as the institutional space moves into the asset class, I think Jack is spot on. It's probably going to be greater correlations ahead, Elaine.
Jump on in, Jack. Anything else you want to add to that?
I think Ash was spot on when he said that it's something, it's not necessarily a Lehman moment because we don't know yet, but it's something to watch out for, something to be on our radar. Definitely the take that I think I'm hearing no one say, and I'm glad because I think it would be wrong. The most wrong take is this is a nothing burger. This is definitely not a nothing burger. And so I was speaking to Larry McDonald today, who was actually spent a lot of time working at Lehman Brothers. He was inside during the collapse, and he was making a lot of the same points as Ash, saying, credit spreads are not blowing out outside of China, so there's no contagion. Credit default swap rates on banks outside of China are also not looking too stressed. So he's saying, Larry McDonald, who's the true expert, said, no, I don't think they're similar. I noted to him.
Jack, I'm relieved to hear that I'm on the same page as Larry McDonald on this one. Larry, of course, wrote A Colossal Failure of Common Sense, which is generally regarded as the canonical book about the Lehman Brothers crisis.
Yeah, it was great. I was actually.
That sounds like all the potential to be a friend of the show. Larry, if you're watching, come on by.
Yeah. So I noted some similarities, though, which is as follows. Number one, I think it concerns a property bubble. The residential real estate bubble in the U.S. is well known, and its popping is well known as well. I think some people who don't live in China maybe don't know just how full of adrenaline that rocket ship of a real estate market is. From 2003 to now, 10x, 20x property values, whereas GDP per capita has increased only 5x or 10x. So I think in China, the stock market's not doing so well, but real estate is consistently seen as a source of wealth. And people who are buying property now are like, oh yeah, of course it's going to keep on going up 20% year over year. So that's a similarity to the financial crisis. I'm also seeing a lot of hidden debt. Hidden debt in Wall Street was the credit default swaps. It was the collateralized debt obligations. In this case, it comes from buyback guarantees. Let's put this up. If I can share my screen now.
I knew we wouldn't get by without dipping into the charts today, Jack.
Yeah, this is a screenshot. This is a table, not a chart. Not a chart yet. Right. We'll see. This is from Evergrande's 2020 interim report. They have over 500 billion renminbi, 500 billion yuan in mortgage guarantees. So if the people who buy the property, the citizens of China, they buy a property and they default on that mortgage, Evergrande has said, we will buy it back and make you whole. And you can see at the final statement here, the directors consider that the likelihood of default in payments by purchasers is minimal, and therefore the financial guarantees measures at fair value is immaterial. The immaterial means we're not including this on our balance sheet because we think that it's never going to happen. So that reminds me a lot of Lehman. It reminds me a lot of AIG. So let's put that screen down. Then there's the off-balance sheet funding mechanisms, which is the wealth management products, which I believe I alluded to earlier. There's the pre-sales where, and this is actually it's kind of the exact opposite. In America, people were getting homes and not paying money. In fact, sometimes you had a sort of a free lunch mortgage or whatever it was called, where you'd actually get 10% in cash and not put anything down. In this case, a lot of Chinese citizens have been pre-funding their sales, so they've been buying properties that don't exist yet, like the land is there, but that hasn't been bought, and Evergrande say, oh, don't worry, you'll get this property, and then we'll give it back to you. To the extent that we had Chinese citizens storming the headquarters of Evergrande last week in Shenzhen, quite alarming footage where, people were calling saying,
just seeing people lose all their money. Yeah.
They were worried they weren't going to get their home, and they're also worried that their wealth management products went to zero. So I think there are differences for sure, but also a lot of similarities.
Okay. All right. I think we're going to move on to my last topic for conversation. Like you both said, it is only Wednesday. Any other big events or surprises that we expect to be coming our way? Rock, paper, scissors. No, I'm kidding. Ash, take it first.
Well, I guess if we knew what the surprises were, they wouldn't be surprises. I have some thoughts about what's happening in the crypto space. Obviously, this has been a very active week with, as I mentioned earlier, Chair Gensler coming forward at the Washington Post conference and saying that this isn't something that he views as an asset class to have a great deal of longevity. That clearly is, it's at a certain level belied, I guess, by the activity we see here on the ground at the conference, at least insofar as some of the people who are participants in this space, who are the biggest investors in this space, who are here today, don't really seem to see this as something that's imminent. But I have a feeling we're going to have a chance to talk more about that on a separate update, Elaine.
Sure. Jack, take the floor away. It's yours.
Sure. Well, there is a certain amount of there's money due tomorrow on a dollar-denominated bond for Evergrande. Evergrande owes that tomorrow, and to the extent that ease has been restored to the market, I think it's because Evergrande came out and announced that it would be able to settle its interest payments, and the market liked that a lot. However, I'm seeing an analyst quoted in this Reuters picture saying, "We do not have a clearer picture as to how Evergrande settles its onshore coupon. It doesn't look like a cash payment, and so it will settle its due, but it won't do it in cash." And what I hope that Singapore-based analyst Chuan Yo Zhou is not referring to would be a payment in kind debt, where it's like, I'm going to pay you back in debt. So it's like, Elaine, I owe you $100. Here is I'm paying you back in an IOU. I would like to think that the markets would not take that too kindly, but we'll see.
You wish, Jack.
Yeah.
So, listen, as the global market anxiously awaits, so do we, bearing in mind, again, it's Thursday already in Asia. That's all we have time for. Thank you both so much for joining me on this conversation today. So I'll let you get back to it so we can keep the conversation going right here on Real Vision. Thank you both.
Thanks, Elaine.
Thank you, Elaine.